Hello traders and welcome to another video review. Today is Wednesday, November 29th, 2023. Let's take a look at the economic calendar for today. As you can see, I got already the most important data that are in the economic calendar for Wednesday. So the past event is the Reserve Bank of New Zealand interest rate decision, and the Reserve Bank of New Zealand decided to leave the interest rate at the level of 5.5% as expected. So we will definitely take a look at the New Zealand dollar during our technical part. German CPI data scheduled for release at 2 o'clock, and this time the market participants expect the CPI to drop to minus 0.2% from the previous level of 0%. 30 minutes later, at 2:30, US GDP, gross domestic product data are scheduled for release, and there is a slight increase in expectations of the GDP of the US from 2.1% to 4.9%. So any disappointment here might be very negative for the stocks, indices, and the currencies. The crude oil inventories data are scheduled for release at 4:30, and this time the forecast is on the minus, almost 1 million minus barrels is being forecasted this time. So for all of you crude oil traders, it would be really good to take a look at this data when it is actually released. So those are the most important data for Wednesday. Let me just switch to the technical part, and we are going to start with the euro dollar. What do we have here is the euro dollar, and the reason why I'm talking about it is of course the USA data released later on. But just before the US data released, GDP, the market participants, especially bulls, managed to break above the 61% of the Fibonacci retracement located at the level of 1.0962, and then made a new swing high 1.1018, and now there is a slight pullback in progress. As you can see, this is the very unfortunate event for the bulls, because the last result, the line of the last result, the last retracement, important retracement line, 61% of the Fibonacci retracement of the last big wave down has been violated, which means the chances for the downtrend to resume are now decreased significantly. So if the market participants, especially bulls, want to continue this up move, then of course there is some kind of a support here in the form of the trend line. So if we apply this line here, you can clearly see that there is some sort of the nice trend line support, very short-term trend line support, of course, in order to keep this momentum going higher and higher. In the terms of the momentum, RSI is right now at the level of 70, is now at the level of 65 points, but it was at the level of 75 points, which is of course the extremely overbought reading on the 4-hour chart, which is why we are coming off this levels. If we apply the line even from this low to the recent situation on the RSI, we can clearly see the similarity between the trend line on the price chart and the trend line on the RSI chart. If there is a bounce from the trend line, there might be a bounce from the trend line on the price, and new highs might be made whatsoever. Otherwise, we might expect some sort of the downside pullback towards the old 61% technical retracement level, big thick black line on the chart, or maybe even 1.0943, which is right now the technical support. The key technical support is still located here, 1.0825, and only a sustained breakout and a daily candle closed below this level would actually indicate more bearishness for the 4-hour time frame chart of the euro dollar. Let's now switch to the New Zealand dollar. to see what is going on there. So the New Zealand dollar, after the data were published, spiked up towards the level of 0.62, basically 6,200 pips. But if we get to the daily time frame chart, we can clearly see that this is a part of the bigger the downside movement. So still in the back, there is the downtrend. We got the first indication that maybe this movement to the upside is something more than just a retracement, because we broke above this level here, the immediate previous high, which is 6,050 pips. Okay, so this level here will now act as the technical support, and of course there is some level just below it at 6,043. So we got a pretty nice zone that had been tested already somewhere here. So right now we are in progress of making the daily candle, but the market conditions are already extremely overbought. So please don't be surprised if this candle will become eventually a red one, or become some kind of a pin bar candle. Now, in the situation of the movement to the upside, let's now find out what is the Fibonacci retracement for this level here. And as you can see, I need to move it the other way around. So there is the high, and there is the low. Oh, there is the low. There is the low, and this is the high. So let me just basically let me just move it. Not that easy, as you can see, but I managed this. And exactly the 61% of the Fibonacci retracement has been hit on this on the level of 6,158. We have a burst to the upside, but as I said, just because it is the 61% Fibonacci retracement, we might see some kind of a reversal here, maybe pullback, maybe correction, as the bears are coming into the market. So right now what we are looking at is a possible reversal on the New Zealand dollar market. As you can see, the next target on the daily time frame chart is 6,050. Let's take a look at the crude oil, because there is a crude oil stock change for today, and we will switch to the 4-hour chart. If we zoom in here to the 4-hour chart, there you go. We got, of course, some consolidation on the chart between 77 and 76.25. So kind of a narrow consolidation. Intraday technical support might be considered to be placed somewhere around the level of 76.21. Okay, so as long as we trade above this level, the outlook remains bullish. However, as you can see, the upside is pretty much limited, because there is a very big and strong zone above the level of 77.35. This is the supply zone, and it's still making the life of the bulls worse, because it's getting, every time the market goes there, is getting crushed, it's getting basically reversed very, very soon. Now, the positive for the bulls is that the short-term trend line has been violated, and now it's being tested by the bulls. So another situation which might be considered positive for the bulls. However, we need a bigger, better, faster, more aggressive and dynamic movement to the upside, especially the one that we close above the zone highs, above the level of 79.40, 79.74. Right, so if we will see it, then the outlook might change for more bullish. If not, there is a breakout to the downside, and the levels are already here for your disposal. Let me just move one of these levels, because there are new data on the chart. We got very nice level here, 74.06 and 73.79. Those levels are, of course, right now the technical support, because the market is above this this level. Okay, so we can change the color to to the green, and the key technical support is still located at 72.16. So please wait for the data release. They might trigger some bigger movement on the crude oil. And last but not least, the Bitcoin. And why we talk about the Bitcoin is because, as you can see on the 4-hour chart, we are about to break higher again. So we are testing this weekly high at 38,456. We just went towards this level. We missed this like $25. Now we are still approaching this level, and we are $456 $50 from the weekly high. There is still room on the RSI. There is still room on this chart. The next target is still located at the round psychological level of $40,000, and only a strong reversal from this zone below the lows of 36,718 would change the outlook to more bearish, because both of the moving averages would be then broken, and of course that would mean maybe some kind of a bigger pullback, maybe some kind of a bigger downside movement is being played by the market participants. However, for now, the outlook remains bullish. The momentum is strong. The momentum is positive. The target is the round level of $40,000. But we need a breakout to the new weekly high before this happens. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Take care and bye-bye.